Ladies and gentlemen, welcome back to the channel. This is an update on Mullen Automotives because I know a lot of people are invested in this name and it's being unrightfully shorted to hell today. It's down 5%, similar to stocks such as AMC. Really, your stocks that did worse in 2022 than the broad markets are being targeted today, when in reality, they've been outperforming in 2023. Now, I know Mullen is not quite in that boat. They've had their own separate set of issues. And I want to give you guys kind of my expectations of some of these catalysts coming out today as well as tomorrow and what could come for Mullen. As well as that, you are seeing data points on the Ortex platform spiking thousands of percents. Yes, we're talking about cost of borrow fees. We're talking about the short interest that continues to move higher here on Ortex, guys. So let's get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section if you have not done so already. So number one, what's going on today? Well, you're not getting any specific news with Mullen. So yeah, if you're trying to find news, you're not going to find any that is relative to today because nothing has happened. Right? But the stock is down 5%. So why is that? Well, my personal opinion, you're starting to see more fear creep into this market. I would say, number one, it's on the debt ceiling, right? Or the debt limit, whatever you want to call it. The fact that you're getting closer to June 1st and you're not seeing any more resolution towards raising this is becoming eerily reminiscent of 2011, when we did not default on our debt, but we got downgraded. Kind of like an analyst comes out and downgrades a stock. Well, it's not too often the United States gets their credit downgraded. And that's what happened during 2011. The closer you get to this X date on June 1st, the more fear you are going to get in the markets. Last time we got downgraded, the stock market fell 6.5% the next day. And technically we got downgraded on Friday and after hours, so you didn't open for trading the next day. But by Monday, you were down 6.5%. All in all was a drop of close to 22% in 2011. Based off of what? The debt ceiling. Now, on top of that, you got recession fears, right? A debt ceiling that's really not going anywhere fast. You have an inflation problem, a lot of different factors that you really didn't have in 2011. So for good reason, investors are kind of getting a little bit fearful now, for good reason, right? Debt ceiling's a economic catastrophe, as Janet Yellen would say, if it does not get raised. So that's important context here, because the stocks that did the worst in 2022, that have had this downside momentum already, are being shorted again today. And they're down quite a bit. Mullen down about 4.39%. AMC down about the same. It's been pretty rough for these names today. And I think it's more or less a comfortability kind of trade. They're not shorting these stocks because they think it's worth it. It's more so, I would think, algorithmic trading programs that are shorting these stocks, because when a stock like Mullen has already fallen so much, that's typically when you would cover on your short position. It's typically when you would take your win and get out after all the stock has fallen a lot recently, like 95% in the last 6 months. It's been rough. But they don't. They're not doing that. They're getting greedy at this point, right? And with Mullen, it's hard to tell where kind of the data really is with this name. Because on one hand, you're getting short interest reports from other news wires and data providers that are excess of 200%. On the other hand, Ortex estimates the short interest is around 12.5%, whereas the last reported short interest was 18.26%, and the stock has fallen about 57 to 65%. 57%, I believe, was yesterday's total. Add another 4% to that, you're like over 60% since the last reported short interest that Mullen has fallen. So it's been quite rough. So you're probably not over 200% short interest. Probably not at 12% short interest. Where are we? We just don't know, right? And the 1 for 25 reverse stock split did not help these data providers get accurate estimates, right? It's kind of thrown a curveball to their programs. And I would imagine the next live short interest or official short interest report that we get, probably in that range of like 35 to 45%, is what I would guess, based off of an over 60% decline since the last reported short interest number that was 18.26%. Shorts, they're piling in. They're attacking stocks such as Mullen, stocks such as AMC, other quote-unquote meme stocks also getting attacked today. Now, specifically with Mullen, I find this pretty interesting. The cost to borrow fees. This has been something that a lot of people and news outlets have kind of ragged on, saying, well, how's the short interest over 200% when the cost to borrow fees are 1 to 2%? This is specifically what Investor Place wrote about Mullen yesterday and said that. How short interest over 200%, but cost to borrow fees are 1 to 2%? That don't make sense. And on one hand, they would be correct. Well, guess what's happening today? The cost to borrow average of 201%. Keep in mind, this is not a glitch. It spiked up today to 183, came down to 162, went up to 171, to 187, to 200, and now you're almost at 201%. Like, there's been multiple reports of this, multiple data points to this. So cost to borrow fees are spiking dramatically today. Cost to borrow average was 10% yesterday. This is up 2,000% on the day. From 10% to 200%. That is a 2,000% increase. Nothing to sneeze at. Same story here. Cost to borrow max at 39% yesterday. Today it's at 330%. That is an increase of almost 1,000% just since yesterday. So maybe the short interest is 200%. I mean, you're starting to get some pretty clear indications. Short interest is probably a lot higher than 12.5%. Okay. We'll have to wait and see what happens with the reported numbers. But I'll tell you, even so far on the day for this Friday, the volume in the options market today, 82% bullish, almost 18% bearish. Those are pretty sizable good numbers for any company, much less a company that's down over 4% today. Again, kind of weird. Now, what the markets are really going to react to, though, keep this in mind, a reason why they're shorting stocks such as Mullen, easy target number one, but it's because there's logical fear that is starting to build in the markets. People are, just think about this, people are like, hey, do I have better odds shorting an Apple, right, that just reported decent earnings, that is up near the highs? Or do I have a better odds shorting Mullen, which does not have good earnings and is about to run out of cash? And, well, come on now. When you put it like that, it's easy to see why Mullen or AMC or stocks of that nature are being attacked today, right? The fear is coming from, number one, Fed Williams. Fed Williams today and came out and made some comments that really don't sound too good. And this has to do with the CPI report, likely that we're going to get tomorrow morning. But on overall inflation, Fed Williams says, not done raising rates if they need to. Fed Williams has been pretty bullish this whole time. But, you know what's funny? We get the CPI report coming out tomorrow at 8:30 in the morning, and Fed officials probably got this report last night or this morning. And Fed Williams comes out at about noon, about lunchtime, time for a good old lunch, and makes these comments. Doesn't sound good heading into tomorrow. He also says there is no reason to cut rates this year. Now, This is a problem because investors are expecting the Fed to start cutting rates by September. That is 45% of the probability. It's a pause from now until September and then to cut in September. But some market participants are getting extreme, okay? For July, 31% of investors are expecting a cut. This is likely around the debt ceiling. Now, that would not be a good cut. That would not be a bullish cut. That would be a very bearish cut. The only bullish cut there really is if the Fed cuts rates because inflation's coming down to their target and the economy is doing good, which could be the case. I mean, there's becoming a more prevalent bullish case for this market if we can get past the debt ceiling and get inflation down. But tomorrow's report that we get on inflation is going to totally change the expectations for Fed policy. If the inflation report is too high, well, you're going to expect another rate hike. Market valuations are pricing in no more rate hikes, rate cuts, like 4 of them by the end of this year. Because stocks like Apple, I mean, you're trading at the highs off of relatively the same volume or a valuation that you've seen in 2021 for Apple. Like, why would you have this market valuation on some of these stocks, these large tech companies, when the economy's slowing down, when the government can't agree on the debt ceiling, when you got the closest thing to World War II we've seen going on in the world right now? Like, there's a lot of bearish things happening. Markets just don't seem to care about because we're expecting that Fed pause and Fed rate cut. So, or multiple Fed rate cuts by the end of this year. So that's what the market valuations are jacked up on. And these data points today, these catalysts, are going to move things around. Now, on top of that, you're going to get McCarthy meeting with Joe Biden coming at 4 p.m. today, coincidentally after the markets close. And this just came out. It says McCarthy rejects short-term debt limit fix ahead of pivotal meeting with Biden and congressional leaders. That also don't sound too good. Last time the debt ceiling was not raised in a timely fashion, the S&P fell about 22%, and the day after the US was downgraded by S&P, the S&P dropped that Monday 6.5%. Not good at all. And we had very little warning before this actually happened. Like that Friday, the markets were only down 0.16%. They were trying to catch a footing here. And then that next Monday, you were down 6.5%. So not really a positive thing or positive things that are happening here in this marketplace. But when stocks such as Mullen and AMC and other names are shorted this heavily, it's not going to take a lot to get a big rally. So that's what I'm going to leave this video off on. Hit the like button and subscribe to the channel if you have not done so already. If you guys want to come trade with me live in real time as well, link down below in the description of this video. But until the next time, you guys take care, and I will see you in the next one.